Welcome back to another episode of Weiss Advice. I am your host, as always, Yonah Weiss. Great to be here today with another awesome guest. We got Ray Reyes in the house. How are you, my friend?
Great, Yonah. Thanks for having me on, man. Excited about it.
I am great to have you. Grateful for you to be joining us. And it's been a while. Obviously, we've spoken a lot through LinkedIn and through the different challenges that we've done over the years. But you have an incredible story, and like all of our guests, something to do with real estate. But let's back up a little bit. I know you served honorably in the armed forces, and I know you've had an incredible career with that as well. Prior to jumping into multifamily about 10 years ago, so why don't you kind of lead with that? Give us a little background, and then we'll take it from there.
Sure. I enlisted when I was 17, just out of high school. Really just because of college. I needed some college money. I was going to play football. That was the dream. Got hurt. That didn't work out. And I realized, I had to do something. And so I went on and enlisted in the National Guard as a military police officer. And really, it's kind of been a good trajectory for me. It kind of set the conditions for my follow-on success. One of the things that they teach you in basic is sort of how to persevere, right? They work they kind of take away a lot of the negativity about what you think you can and can't do, and it stretches those limits. And that's kind of taken me a long way, even today, because I mean, there's always negative thoughts that come up, and you just have to work through that. So, uh, to keep it short on there, I served. I went to Desert Storm when I was in the National Guard, and came back from that. And as I was getting ready to graduate from college, I decided I wanted to jump back in as an officer in the military. I just liked it. I liked to serve, and it was just something that I wanted to do. So after that I did essentially a few years in the reserve as an officer, and then went active duty for over 20 years. Served over 28 years total. Right towards the end of there, I left just like I went in on my own terms. I left on my own terms. I had a chance to kind of stay in the military and sort of work towards the next rank, which would have been full bird colonel for me. But I really decided I didn't want to do that. I really had other goals in mind, and that's where I am today.
Incredible, and quite a long time. I mean, spending your career, but also, like you said, going in and leaving on your own terms really does say a lot. But thank you for your service. It's incredible. I mean, I was a kid in Desert Storm, and I remember it vividly. Watching on TV and seeing the images, but in combat and doing that, I can't even imagine what that must have been like. I'm sure you've learned a tremendous amount of lessons over the course of your career as an officer, as well as everything else. And I'm curious to know like how what that transition was like, going now full time in the real estate world. It's really a new career, right? In a sense, because you've taken on investments, you've taken on the stewardship of investors and leading a team as well. So love to kind of hear, kind of how that transition went for you, as well as some of the lessons or maybe things that you've applied from your military career into the real estate world.
Yeah, no, absolutely. And I've always had the real estate bug. I just grew up with it. Monopoly was my favorite game, and so even along the way throughout my military career, I was able to acquire some single family
Mm.
homes that really helped. Because I mean, yes, there's a lot of ways that you can get into this business and this space without any money, but it's incredibly difficult. And if you've got a family, if you've got commitments, it's just hard to say I'm going to stop, earning this W-2 and I'm going to go jump into this full time, right? So there are some things along the way that you have to consider. If it were just, you as an individual, it's a much easier decision. You can sleep in a car if you had to, right? And whatever to make it work. But other considerations. And so I had that kind of a leg up that I wasn't starting complete from scratch, but towards my last assignment, I jumped in a couple of LP deals in the multifamily so I could learn essentially how they worked. There's always an opportunity for new people to come in and do mentorship programs.
Right.
In my case, I felt the best way since I had some knowledge and obviously I had a good education. I had a chance to work, and finish my MBA while I was in the military. So I felt like the best way for me is just really understand, peel the onion back on how the multifamily syndications and other type of investments besides the straight single family worked. And so it wasn't completely foreign to me when I jumped out and started working on it. Essentially, I did a GP deal while I was still in the military. And it was like my last year in. Typically, the last year of your military career, they give you a chance to kind of get your bearings about what it is you want to do next.
Right.
So for me, it was pretty simple. I already had an idea. I was just using that time as wisely as possible. So I was able to get into a GP deal pretty quickly. Uh, I think the biggest lesson for me was, coming in is essentially, I retired in 2019. So what happened in 2020? We really got into the whole pandemic situation pretty quickly thereafter,
Right.
and so I struggled a little bit trying to figure out how to grow my business using my background, because essentially, if you're going to raise capital, and that was one of the main things that I enjoy doing and I enjoyed then, you really have to have a base of people you can reach out to.
Right.
And so I really had to work on growing that base, and going from a situation where I didn't even have a picture on a social media profile
Right.
for security reasons,
Sure.
to now, like, hey, here I am. Everywhere you go, you have to set those type of conditions. And so it took a long time to do that. Then I think that the other challenge was obviously when the dynamics in multifamily changed, it really did cause some friction, because you had deals that were in the works. You had a lot of investors that pulled back, a lot of concerns. Obviously, we all know the best time to invest is when everybody is doing the opposite, right? Those are when the deals are happening. But even to this day, there's a lot of folks that are kind of holding on because they're not sure. There's a lot of unknowns. So
Sure.
how do you maintain your business along that time frame? Not just when it's good, when the tide is high and everybody is, you just close your eyes and buy something and you're going to make money on it. To now, you really have to squeeze the operations. You really have to pay attention to every penny. And on some of the deals that we have, and I've got just under 500 under management still that we haven't sold and are working through. And
Hmm.
you have to focus on that. While you're doing that, you have other partners in this business that are all going through their own challenges of how they're going to make money to support their families. And so your partnerships, which is kind of one of the lifebloods of the business, is something that you have to maintain and that you have to react to, because things change. Not everybody's in the same position as me of having other assets that could kind of help me ride whatever storm, right? Some people didn't have that background, or they didn't have the ability to do that, and they had to go back to work. I had a good friend of mine who was, he was a colonel in reserves, and he really wanted to do this full time. But when the pandemic hit, and then certainly after the pandemic, when things started going, the Fed lost its mind, because, forever they said, oh, we're fine, nothing to see, nothing to see. To then, oh, we have an emergency here.
Right.
We're gonna jump, the Fed funds rate by, what was it, about 5 points, and
Right.
so right around that time, he's like, Ray, I gave it a shot, but I got to go back to, I got kids, I got
Yeah.
small kids, I got to go back to work. And
Close a lot
so
of deals that way. Yeah.
it, every partner that I had and have has to go through that dynamic and that thought process and figure out, can they do it? Can they sustain it? Can they do it part time? And so that, I think, has been the biggest struggle, is how to sustain operations while some of those partnership foundations are sort of cracking a little bit. And really, in bad situations, only the strong survive, and that's absolutely true.
Makes sense. And there's always going to be uncertainty, but you're absolutely right that when there is uncertainty, that's kind of the time when to kind of pivot and see where other people are not looking and make the best investments there. But yeah, 21, 22, those were years where, like you said, you just throw a rock and buy an apartment with your eyes closed and make money on it. And unfortunately, a lot of people got in, and there was what a friend of mine and someone on this podcast mentioned once. There wasn't a real estate bubble, but there was a syndication bubble. And to this day, we're seeing kind of the repercussions of that. That unfortunately, a lot of people tried to get in, because it was easy to make money. And unfortunately, a lot of people lost money and are, still losing money. But you talk about how to save money and how to focus on the operations where you're making sure that every single penny, as you mentioned, is kind of under watch. I'm curious how you're able to manage that, because it is a challenge. What are some of the pointers or keys to making sure that your portfolio is above water and staying afloat?
I think that one of the biggest things is just being and just in full disclosure, I was not, except for one deal where we had to jump in. My team has to jump in as a lead sponsor. Most of the times, we were in a general partnership role with asset management responsibilities.
Right,
So we were asset managing, but it wasn't my team alone. But
right,
I think that the biggest thing that we tried to bring to the table was be an honest broker uh, for things. And when information wasn't being provided, push for that information. When something looked like it wasn't quite right in the reporting, follow up on that information. And even more importantly for my team, because of our focus being so much on on transparency, that's one of the things that in the military we always we didn't take that for granted. We just had to give information, and we had to be forthcoming, and come hell or high water, we had to give right information, factual information. So for me and my team, that transparency to investors, because I think there is this this tendency when things go bad to want to go put your hole in put your head in the sand and hope hole in the sand, hope that it goes away. It doesn't go away. It's only going to get worse. And so we tried to do that in all the deals. I think one of the things that has helped a lot, especially when you're looking at how you're dealing with some of these partnership struggles, is a lot of the AI capability that's out there now. I mean, obviously 2021, 22, I don't think anybody was really looking at AI. There may have been some very sophisticated, funds and, billion-dollar funds that were using something, right, to kind of automate things inside their companies, but AI was not prevalent. I think that's helped. I think where people uh, make the mistake with AI right now is that they think that it's the answer to solving the problem. It isn't the answer. It's not something you do in lieu of doing something else. It's in addition to. So, for example, whereas before my partners and I would all run underwriting separately and say, okay, we're going to run them separately just to then compare to see where we are on our assumptions and what the final returns are, et cetera. You may have three people running the underwriting. So now that's obviously three for each deal. You may be spending 3-4 hours underwriting these things each. So that's, let's say, 12 to 15 hours of time that we are doing that. So if you don't have the partners to do that, and even if you do, you now want to run that through AI systems that can then basically check your information. So now you have another set of eyes that can basically give you that information. You have to be aware of the fact that it sometimes does it wrong. That there are some issues with some of these, whatever language model you're using, it may or may not be the right one. You may not
right.
have the right inputs, but assuming you're able to work through some of that, it now gives you some ability to replace some of those extra set of eyes that you had. It doesn't replace yours, but it replaces maybe some of the others.
Sure. That makes a lot of sense. And I think you're absolutely right. Very few people years ago were taking advantage of AI in the right way. But nowadays, I think most people, I'd say it's much more common to find that there's very few people that aren't taking advantage or utilizing AI in some form or another. I think if you took a poll now, it would be the exact flip, opposite of, the usage of AI. The question is who's using it right and who's using it for, for the right ways, and, building, not just using it, but actually building from it. And that takes a lot of time. You putting in, it's not going to happen overnight. These are systems that I know, prompts and things like that, and can take, weeks or months to build, just programming and feeding into it. But the more you feed into it, the more you get out of it. And that's what I found, it's really interesting because in the same way that, you talk about maybe 10 years ago or, whatever you were saying, you didn't have a single social media presence whatsoever, right? Well, so too, it's the same thing. You put the effort in, you realize, you for me as well. I didn't have 10 years ago social media, but you put in the effort, you double down, you triple down, you keep putting in, and daily you put in efforts, and you build that muscle over and over again. So I think in the same way, AI is has become a tool and so many different forms of it that it's constantly changing and rapidly growing, that I think business models will continue to develop that way. And I'm really happy to see how it may make big strides in the multifamily space and the real estate space in general, because it's an industry, commercial real estate in general, that's a bit archaic. It's so many things about it are still, even though we're changing, talking about like title insurance and insurance in general, all these different things are still functioning the same way they did 50 years ago, right? It's kind of crazy.
Yeah, absolutely. And I think people are, there are some folks out there that are trying to crack the code. Obviously, what has been a detractor, but it's also how you can take advantage of real estate is the fact that some of that information is not clear and clean.
Right.
And certainly there are, some people that have access to it that can make the right decisions, and others that don't, that won't make the right decisions. And so I think the cleaner the model gets, then it becomes maybe a little bit harder in some ways to really find that diamond in the rough. But I think people will still learn how to figure out how to work the system a little bit. And it'll be a long time before I think it's something like the stock market where you're buying basically like a REIT, and you're buying a unit and it goes up or down and that's all you're doing. I don't think it's any time near. We could be wrong, and don't quote me on this one, Yonah. Who knows what comes up next? But it's the space that we are working in right now. When
Right.
you have deals that are running anywhere from, I've got a deal that now is only a 2-year deal. And then I've got some that are 5 years on the multifamily. You really don't have to think that far ahead to in your analysis. You still have to forecast for that. And obviously forecasting is its own, difficulty, especially you don't control the circumstances, the black swan events that can happen, that have
Right.
happened, right? So some of that is difficult. But I think at the end of the day, AI is helpful. I think the way that people should approach it, the way that I approach it, let's put it that way,
Mm-hmm.
is that I take a bite of it at a time. Okay, I have a problem, right? I have, let's just say, let's use LinkedIn. Obviously we do a lot of stuff on LinkedIn. It's hard to keep track of people on LinkedIn. You connect with people for X reason, but you're like, okay, well, how do I ensure that I'm not dropping a ball with some of these connections that I have? Because these are potential partners, they're potential investors, and what is it that I do to ensure that I have some ability to basically trigger myself to respond and keep track of those things. It's not automated. It's not like something's going to pop up and say, hey, you haven't reached out to Yonah in 3 weeks. Go reach out to him. Well, guess what? There are tools that can do that now and say, hey, don't forget about Yonah. That's an important thing. Now, where people make the mistake is they try to completely automate it, so it's not even them. And the tools aren't that good where people won't know the authenticity of a chat, of a
Yeah.
DM message. And I think that's where people, some people are just trying to do it so it's like fully automated, where they don't even know the person, to what I like. And in this space, where especially we're asking people to provide significant amounts of capital, there has to be authenticity. And if there isn't, you've lost a potential customer for sure, because this is still a people business.
Absolutely. And are you using LinkedIn, do you find, as, a primary source for raising capital and making those connections? Or I'm curious to know, you talked about before kind of starting out, finding your base and building that base. How did you do that? And, to this day, like what are some of your practices?
Yeah, I mean, obviously it starts with LinkedIn. There are tools within LinkedIn. I have Sales Navigator, which is an additional tool, but essentially you can find the type of folks that are interested in investing. You're not going to convince somebody to invest. They have to want it, right? I mean, the minute you're trying to sell it, you're not going to get it. You have to find somebody that is in the space and in a place in time where they have ability to invest monies to grow their wealth. They may have sold the property, they may have sold a business, they may retire. In my case, a lot of folks, they retire out of the military. They have their pension, but now they also have a job. So they have some additional income and they need to do something with it because Uncle Sam's will take it from them if they don't, right? Taxes will kill you if you just let it sit. And certainly that's not the way to grow wealth. So you have to do something. So my focus is, okay, who are the type of people that I believe would be good investors that would want to invest with me and partner with me? And I still invest in all the deals. I don't raise capital on deals that I don't put my own money in. I mean, to me, that's a fundamental piece of it. And if I'm not putting my own money in, then how do I
Yeah.
potential investors? Then I try to look at what they're talking about and pay attention to what it is that they're doing, before I even talk about, hey, I got these investments.
One of the things that I wanted to just kind of reemphasize is in the deals that I've invested in as an LP, it's been extremely important to me to see that the sponsors have skin in the game and not just that they're going to reinvest the fees that they're already collecting, but actually from their own pockets and their own bank accounts. Um, in one deal, the sponsors didn't even take any fees. There were literally no fees, acquisition fees or anything. And I understand that, for a lot of syndicators, it's important to kind of build a lot of that into there. But this one deal that I went in, they were very convinced that the deal itself was so strong that they wanted the numbers to speak for themselves. And that really sold it for me because it was like, okay, these guys know what they're talking about. They're willing to put their money where their mouth is, and invest alongside. So those are huge. And obviously, when you're communicating that with new and potential investors, whether savvy or not, I'm sure you've dealt with plenty of people over the years who maybe it's their first time ever investing in multifamily. Because you were that guy once upon a time as well, and it's scary, to write that first check, you know. But and especially nowadays when uncertainty has become even more prevalent, I think you have to be able to reassure them through your track record, through the transparency, as you said, which is probably the most important part.
I think a big part of the communication has to be what can go wrong in deals. I think if you're authentic and you've been in the space for a while, you know that there are ways to lose money here.
Yep.
That's no different than any other investment. This is, I don't think that you can say, well, multifamily is bad and investing in stocks is good, and vice versa. I mean, I think there's diversification, and smart investors will not put all their eggs in one basket.
Right.
But at the end of the day, I think most people will understand that there are risks, and that's just part of the business. And obviously you want to mitigate those risks, and the deal has to mitigate as many of those risks as possible. But to tell an investor, first of all, it's probably not legal to say, hey, there's no way you're going to lose money on this, because the PPM, the private placement memorandum for these syndications, and just about any deal that I would do, whether it's a joint venture or a syndication or whether it's through my fund, there has to be acknowledgement by the investors that, hey, I know there's risk there. There's a way to make a lot of money, but there is risk. And so I think that that's important. But it's one thing to have it in the paperwork. It's another thing to make sure you talk to people and say, hey, just be aware here. We are going in to make money. I wouldn't put my money in it if I thought we were going to lose money.
Right.
But being clear, especially nowadays, is extremely important because investors will appreciate it. I actually had one deal where this was at the end of not last year, the year before. It was like December of, I guess it would be 2024. We were about to close on this thing, and the rates changed. Right,
Yep.
the lender at the last minute will throw a wrench in the deal. They got nothing to lose, so they'll bump the rate, and now you're like, well, wait a minute, that was a good deal. It's no longer a good deal. It's an okay deal. And so I actually went back to investors and I gave them their money back. I said, guys, this got a little bit messy. I'm not comfortable with it for my money, and I'm certainly not comfortable with your money either. more importantly so, because I tend to be a little bit more risky with my money because I've been doing it longer. But an LP may or may not have that same risk tolerance. So I want to
Yeah.
err on the side of safety. So I ended up returning money to the investors. And one of the investors came back to me and said, Ray, I appreciate that you did that. I mean, most people would not do that. And so I'm looking forward to the next deal. And to this day, he's like, Ray, when are we doing a deal? Right.
Yep.
And I'm not going to present bad deals to investors.
Sure.
I think one of the biggest things when we talk about partners is that I've had to make a change. I guess we're going to get into a lessons learned part, so maybe I'll leave it
Yeah.
there. But
Yeah.
there
No,
are
go,
some
go
things that
for it.
I've really learned about that I'm doing a little bit differently.
Yeah, no, that's a great kind of transition. I'd love to hear a couple of those lessons because, like you said, partnerships is probably one of the key ingredients. Especially, multifamily is not, something you really most people do on their own. There are a lot of times partnerships involved, a team sport. So, love to hear some of the lessons that you've drawn out from some of that experience.
Yeah, I think on the partnership side, it's been the ones where I really had to dig deep because one of the things that when you're in the military, you kind of you feel like most people that are with you and around you are going to tell you the truth. That's the way we were trained. When we weren't trained to tell you, just the good news. We were trained to say, here are the facts, and then we have to react from those facts. You plan, but you also know that the first contact, your plan will not survive the first contact. You have to adjust your plan based off of that. You still have to plan. Okay, I'll give you a good example. It's been a couple of years, but it really kind of highlights that fact, right? That statement. So we were at a conference, and at the lunchtime, everybody kind of clears the area where the big area where they're having a conference, and they go do lunch, and for that hour, that place is empty. There may be a couple of people here and there in the back that are maybe doing some networking that happens, but the stage was empty. So I saw a group of individuals jump on stage, and they were taking pictures, but it wasn't just pictures. They were pretending to be speakers at an event,
Wow.
at the event, right? And so, in my mind, the way I look at that is basically it's like taking a picture next to somebody else's fancy car to pretend that it's your car.
Yeah, for sure.
And these are younger folks, so nothing against young people, but to do that and then use that to potentially then sell it on your page as if you somehow were credentialed in some way, or capable or qualified to be on that stage is absolutely crazy. But
Yeah.
I guarantee you they used it. I mean, they used it. They may have said, hey, I spoke at this conference, but just having a picture there that makes it look like they were speaking is a problem to me. And
Absolutely.
so you get a lot of those folks that you have to deal with. And so one of the things that I really had to work on is strengthen the way that I vet potential partners. It's not just running a credit check. We used to do some basic checks, and we'd go in and we talk to people and see what they've done, but we've kind of ramped that up completely. So now I have an entire system of just vetting potential operators, because as I transition more into the capital allocation space, I'm relying on operators to operate these properties in not just the good times like we talked about, but in the bad times. And so we've really done a lot on my team to really increase the vetting and really outsourcing some of those checks. I use Clear as a system that we use to basically run checks, not just on the individuals, but also on entities that those individuals were involved in. That's we run that. They pay for it. I'm not going to pay for, they want my money and my investors' money. They're going to pay for that. That actually is one way to really self-select some of the rotten apples out, because the minute they know that we're going to run their checks and they're paying for it, they don't even go through the process, right? So,
Wow.
but even then, you still get some folks that you have to, you get their information and you start asking them questions. You've already screened them. We screen them first. We ask the questions, and
Right.
then we run all the checks, and then we combine, compare the two. That, in addition to some other things, just the interviews and making sure and actually talking to some of their investors in current and previous deals, just to get a full picture of them. And so a lot of that I had to really work on to get all of that done. And what that meant was we were doing less deals. And
Sure.
that, if I depend on some syndication fee to run my business, then that means I'm going to be taking as many deals as I can, because if I don't get those fees, I can't bring home the bacon, right?
Right.
But that's not what I'm focused on. I'm focused on building relationships and making money, building wealth,
Over the
and
long term.
that's
Sure.
not a get fast scheme. Very people can do it in a get fast kind of way, unless they're taking extreme risk and they get lucky. But so I think that was one of the biggest things, is really not just taking people at their word and doing some checks, but really focusing that entire process of vetting into
Right.
something that was important. And we vet the people, then we vet the deals, not the other way around. Because you can get caught up in a shiny object where, oh, I love this property, but unless the team that is running it is correct and passes the vetting, we don't even invest. It's the jockey, not the horse.
Absolutely. No, that's huge. And it really does show some of the points you're making there about just credibility and people taking advantage of situations in order to kind of prove credibility. And it's so unfortunate that there are people that fall for it because social media can be extremely misleading sometimes. And unfortunately, there are dishonest people out there in this business, like in any business. And and for better or for worse, some of those bad apples make a bad name for for the rest of us, and it's unfortunate. But you setting an example and kind of leading the way and doing it the right way, I think is all you can do. And and building wealth over the long term is really what real estate is all about. It's not about getting rich quick. And some of these people, syndicators out there who are just trying to feed themselves through the fees. Well, guess what? We saw a lot of those people have their properties taken back by the banks in recent years, and it's sad to watch, but we have to lead by example, doing it the right way. Um, Ray, I want to transition now to what we call the final four. These are four questions that I ask all my guests. First one for you is, what is the worst job that you ever had?
Well, I didn't have many jobs in my life, as far as, but I guess within the military, I would say, if I were to take that, because in the military we get transitioned from different jobs. When I was just going back to my days way back, but it was certainly one that I did not enjoy. Was we had when we were in Desert Storm, we had essentially a job where we would take basically the excrement and the waste from where people would do their business. You'd have to carry that and take it somewhere else so that it could be disposed of. And this is a daily task. And Private Reyes did not like that task one bit, right? You're carrying these 5-gallon jugs full of stuff, right? It's just so I don't gross out everybody. You have to take it somewhere else. And it was just like, and in my mind, I'm going, this is ridiculous. This is war, right? There are worse things in that, but to me, that was one that really stuck out as something that didn't want to do. But as part of a team, sometimes you got to do stuff like that. But I certainly did not enjoy that one.
I don't think there's anyone that would enjoy that. Ray. Yeah, but as a team, you got to do what you got to do sometimes. But I would definitely, if I had that, I would probably list that at the top of my list of worst jobs. Second one is, what's a book you've read that's given you a paradigm shift?
Yeah, I think it's this. This is, I think, a paradigm. If I were to say paradigm shift, I would have to say the cash flow quadrant,
Hmm.
because that one really opened up my mind about how to move beyond just W-2s, and how to really kind of pay attention to some of these other aspects that are important, whether it's running a business, whether it's running, having investments. And I think just thinking about those two separate ways to that really impact a person's wealth
Hmm.
much more than say a W-2 job in the long run, I think is probably
Right.
the most eye opening for me.
Yeah, that was an extremely powerful book, and we've had that mentioned on the podcast a few times before. But Cash Flow Quadrant, definitely top of the list over there. What is a skill or talent that you would like to learn? And this could be anything.
Yeah, I think if and this is something that I continue to focus on, is really how to better do some of the marketing personally. So I have a team that does a lot of marketing for me, and I know that when you run a business, you don't want to work in your business, you want to work on your business. But I enjoy that aspect of it. I enjoy some of the graphic arts pieces, some
Yeah.
of the technical aspects of the job. I really enjoy learning about it. So if I had the time, I guess I would say that if I were going back into the military, one of the things that I would want to focus on is maybe some cyber type work, cyber analysis, something along those lines. I like those technical type of jobs. And so, when you talk about marketing, it's not about the actual piece of it, but it's actually the system, the marketing system, and how it all ties together.
Fascinating. Yeah, I mean, listen, marketing is really the central core to any business, and real estate especially. There's so much of it, the marketing, especially when you're raising capital and you want to make sure to get the deals to the right people in the right time. Yeah, that's huge. And sure, you can hire it out, but having an understanding of every aspect of the business is also there's incredible power to that as well. So yeah, definitely, that's a great one. Fourth and final question: what does success mean to you?
Yeah, I think success for me is essentially when I'm able to. One of the things the way I measure in increments for me is how much passive income. And when I say passive, I don't mean just from passive investments, but something that when I go to sleep at night, is making money for me, whether I do something in the morning or not. Right now,
Mm,
obviously, there are certain things that I'm still doing as part of the business to grow wealth,
sure,
but the more that I'm able to outsource and the less that I'm personally doing on a day-to-day basis, I think is how I would measure success. The more that I can do that, the better. I love traveling, so to me, if I can travel the world, you just take off. And last year I did it a couple of times where I just left, and I still had my tools so I can keep in touch with certain people and do certain things. But the world wasn't going to end. The business is not going to fall
right,
away because I was not taking a call on a Monday morning, right? And so I think to me is that it's the time freedom. That's
sure,
the one thing that we cannot control, how much time we have left in this world. And the older you get, the older I get, the more important it is, right? I mean, I mean, there's a clock. You don't know when the clock is going to hit zero, but every day you get a little closer. And so having the ability to do the things that we want to do when we want to do them is how I measure success. And if I can pass that on to others, to family, to friends, and other people that deserve that, even better. So I love talking about it. I love teaching people. I don't do any formal mentoring. I just don't have time for that at this point. I have other things that I like to do, but I'm happy to help and kind of pass some of that on because again, we don't get that time back.
yeah,
It is finite.
100%. That's huge. And you know, having lived a fulfilled life up until this point, you want to make sure to utilize every moment you have. You're absolutely right. The clock is ticking. A lot of us don't think about it too much, but it's there and we have to. So I appreciate you bringing up that point and sharing your perspectives. Ray, it's been awesome. Love to hear from you. Love to hear your story and really inspirational to a lot of us. So thank you for joining us. And finally, where can our listeners find you or reach out to you if they want?
Yeah, the easiest is on my website. It's ismaelrayreyes.com, ISMAEL Reyes, REYES.com. And from there, they can jump in into any of my other channels. So that's probably the easiest way.
Awesome. So we'll make sure to put all that in the show notes. And really grateful for you to join us. This has been a lot of fun.
Thank you for having me, Yonah. And hopefully this helps some people make those kind of hard choices and make good decisions. And I know that you're always pushing for the same. So I appreciate what you do.
Thank you so much. And to our listeners, thank you all for tuning in once again, all the way till the end. And remember, until next time, the best advice comes only when you ask.